What is good, everybody? Today is July 28th, 2025. We're going to be going over the super awesome price action from today. We're going to be looking at how we can use discorrelation to tell us, yo, chill, do not trade today. We're going to look at how SMTs impact the market, how we can find high quality drawn liquidities and positioning levels in which we could potentially take trades off of, and why it's just so important to actually react to the market and not try to predict it. So without further ado, let's get into the trading day. All right, let's start off with a little bit of top-down analysis. And I know we all hate it, but we have to do it. We have to figure out how the day evolved, what we looked at going into open, all of that stuff, right? Zooming out to a daily time frame, let's look. We are completely skyrocketing. There is no trade here at all until we see more recovery, until we see displacement back in the range, until we see, like we're doing now, potentially a displacement past this level right here is what I really want to see going into this week, so that we can then go ahead and target weekly gaps, all of these equal lows down here, stuff like on ES or NQ. This is a perfect area to target, but that's only if we get displacement back in the range. Until then, I'm really not interested in trading at all or only taking longs until that point. So without further ado, what do we actually see going into the day, right? We had a super huge new week opening gap on Monday. So drawing that out, it would be something like this. And then on NQ, same exact, just like this. And then also on ES, we had this super interesting 4-hour for value gap that I loved because we had overlapping confluences here. We had the 4-hour for value gap. We have this order block right here that I'll mark like this, perfectly aligned. And then we also have this 1-hour low that acts as that order or that fair value gap high, right? So we have 3 points that we could potentially see price pull towards, right? Now looking at this bigger time frame range right here, we have equilibrium sitting all the way down here. This would be your bigger time frame sell side level right about here. We have buy side sitting all the way up here. And then finally, we have the same exact stuff on NQ. So looking at us right in the face, buy side right here, and then sell side all the way down here. And you do have an SMT on those lows, but it really does not matter unless the market pulls all the way towards those, right? So looking up, how do we start this day? We opened the day on NQ, sitting inside this new week opening gap, and we hadn't yet hit equilibrium on NQ. However, on ES, we opened the day and we've completely ran through that new week opening gap, and we're at equilibrium. This is looking like a super great bullish setup on NQ, right? Potentially, if we see displacement past this level, creating us a change in the state, we could potentially then see the buy curve to the upside here. Looking something like, just to give you guys an idea, the buy curve would be right about here. So that's what I'd want to see, but only upon confirmation. Look, I'm not going to marry that long bias because if you look, it didn't play out today. And because of that, I didn't take any trades. So going in, what do we see? On open, this is the most important thing of today. There is a super interesting first 20 minutes that I want to mark out and see if you guys can figure out why I think these 20 minutes were so just damn important to analyze in the morning. And why these made me say, okay, I'm not going to be trading today. From 9:30 to 9:56. Look at how ES is moving during these 20 minutes and how NQ is moving. ES is slowly chopping downwards while NQ is slowly moving upwards. This is not a cute manipulation SMT that gives us a higher probability trade. This is textbook discorrelation. We know discorrelation is one of the trade filters that when we see, we actually have to say, okay, yo, I'm not taking a trade right now until this clears up. I am not going to trade when there's discorrelating assets, especially all the way through 950 to 1010 macro. I am not going to be trading at all. So looking, red 956, this clears up. And what this does for us is NQ ends up taking this high and creating change in the state where we could potentially want to see a long, but I didn't end up looking for any kind of long because ES is still looking overly bearish, right? We're back into this fair value gap, order block right here. We're still looking super overly bearish. At this point, we had came in and I said, I'm not going to trade. I'm simply just not going to trade. Like, this market is not what I want to trade, right? Let's look at what setup actually ended up presenting itself and why it was kind of clean, right? So this higher in NQ would have been right about here. So this would be SMT here, external SMT. And then we also had a perfect, beautiful internal SMT right here. So looking at this level, let's go ahead and NQ mirrors ES pretty well. So we're just going to check out ES because it's the most interesting and best looking asset for today, right? This is a textbook market maker buy and sell model right here. Right at that 956 time, we start to see efficient action towards the upside to go ahead and tap into that fair value gap, and then we displace lower. We have an external and an internal SMT. We have generated liquidity right here. All of our fair value gaps that get left in this leg end up getting tapped back into and mitigated, right? So now they're lower probability if price wants to trade back to them. We still need to see confirmation that we're going to run through them. However, they are much lower probability now to bounce from. So looking right here, we put in our final fair value gap right after that SMT, or right before that SMT. And then we go ahead and end up completely just running that, right? So we run that fair value gap, giving us an inverse fair value gap. We go ahead, we make change to the state right here with displacement. And that validates us for a potential sell model down to this low. Now, why was this actually not a bad trade at all? Because we have a higher time frame draw on liquidity past this level to this fair value gap, order block, and resting low sitting there. We have generated liquidity on the way towards it, and the higher time frame is overly bearish on this day. We completely ran through the new week opening gap, telling us, okay, we don't want to bounce from it, we want to go, right? So looking, where would you have taken this trade? My entry would have been on this change in the state, stop at the high, and a take profit 1, take profit 2. Now, yes, this is not a good trade. You do not have great RR, but the trade is high confluence, at least if you didn't look at discorrelation, and it ended up playing out. Where would the best entry have been? How could you have sniped this? You could have gotten this for value gap entry. I thought this was perfectly fine, nothing wrong with this at all. And then leave runners for this, nothing wrong. But the best entry here would have been turtle soup. And it would have looked something like this, or even better if you want to place a tighter stop. This would have been the tightest I want to place my stop, and just, geez, dude, look at this. This would have been a crazy trade. So what is turtle soup? Turtle soup is when we have a market maker model and everything is still looking good, but price wants to come back up and sweep this first retrace or that first internal high right there, right? So if we look, market goes ahead, comes back, bounces back, most likely bouncing off of some kind of fair value gap sitting right here on the 3 or 5 minute, and then it goes ahead and continues to generate liquidity. This is our signal right here. When we continue to generate that liquidity, but we ended up sweeping the high right there, and then we're gonna expect to run through this, that's our signal that we can say, okay, we can now expect price to have efficient action. Because if it's gonna continue generating this liquidity, that almost starts to look like a trend line right here. We know that we can expect to run through all of this, right? So we see that turtle soup, we take our entry on the sweep, and we look to put our stop to break even. Super efficient movement down. How would you have targeted and how would you have played this trade? So say you take turtle soup, I would have put my stop at the high, honestly. I would have looked for first take profit right here, second take profit at the bottom of this model, and then third take profit all the way here. Where else could you have done this? You could have played this on this fib retracement right here, so fib extension down to this 2 level right here. When we see all of this stuff line up, get hit with perfect displacement and perfect confluence, I always expect to see that 2 level get hit. And looking right here, I want to kind of share something that I've been seeing in the charts that maybe you guys have seen too, but I think this is super interesting to look at. Zooming down to a low time frame, the 15-second, right? We see a small manipulation leg right here. So pulling this over, the small manipulation leg that if we want to mark standard deviation on, it would be right here. Why is this manipulation leg? Because it comes down, ends up faking it, retraces, and then comes, sweeps liquidity, and that's the final move before displacing, right? So this manipulation leg, this takes us right here to -2. We hit it, we come down, tap negative 3.5 to 4, geez. Then we come back up, we tap equilibrium, we come into this inverse fair value gap, and at this point, the market is still respecting the standard deviation. It's still respecting this perfectly. So now what this gives me confidence to see is that the market will go ahead and respect this bigger time frame standard deviation level. If we respect the lower time frame level, I expect to see the higher time frame level get respected as well. Because when this happens, it shows me that this sell model is in tune. It says this is in tune. I can expect to see this internal model play out, and then we can see the external model play out. One thing I even want to check even again is if we zoom lower to say a 5-second, and I know, yeah, this is going to look horrible. We're on ES, it's fine, right? Can we potentially see right here another manipulation leg right here? Boom, boom. If you want to draw it to here, boom. Either way, if we look, the final manipulation leg, even all the way zoomed in, look, it goes down, it hits 2 to 2.5, it comes back up and it taps equilibrium perfectly. Look, hits 2 to 2.5, taps equilibrium perfectly, and then it moves lower. That is the efficient action that we want to see. When I see this first one get respected, I see the second one get respected, I can now expect to see that external one that I'm actually going to be taking a trade off get respected. That is what's so beautiful about standard deviation. It's just so accurate, it's so fractal, and it's so great to add to your trading. So after this, we see ES hit this level, and then from there we kind of just do nothing for the rest of the day. We just kind of continue selling off. Don't really have much action. There was kind of this model playing out, except I didn't really think it was that great because This would have been a great entry right here, except it gets stopped out and then it goes in the favor. So like I wouldn't have been looking to trade this. So I mean, this was really the only trade of today, and I didn't take because I thought that discorrelation made everything super low probability. But I mean, you're looking at proof that the market maker models play out no matter what. This is a super great way to trade. It will absolutely change your trading. If you become a student of these market maker models, this will change your trading. This is truly how the market moves, through models, not through trends, uptrends, downtrends. Market maker models are what the market moves off of. Master these and you will be incredibly profitable. So honestly, that's really all the day had for us, but I think I want to quickly cover one more topic. Today was the day where the market tells us, yo, there is no trades for you today. With my system, there was no trades for me today. So instead, what I did was I simply watched. The market is always trying to teach us something. Today, it didn't teach us, yo, you're going to make $1 million today. Or it didn't teach us, hey, here's some new technical thing you can analyze. Today, it just taught us, I'm going to increase your discipline stat today. I'm going to give you a potential setup, have you not take it. I'm just going to make stuff look good, but miss one confirmation and test you. Do you cave because you want to press the button and do you want to trade? Or will you grow your good habits and your discipline every single day? That's what we need to do. We need to be in tune to the frequency, almost like God teaches us lessons every single day in our day-to-day life. And if we're not in tune to the frequency, we don't see them, we don't learn from them, we don't get anything out of it. We must be in tune to the market's frequency. Listen to everything that the market tells us. If it tells us there's no good setup today, I'm going to be in tune and I'm going to be like, thank you, market, teaching me discipline today. Great. You have to recognize what it is and be happy with that lesson today. It might teach you discipline for a whole week. It might teach you money making for a whole week. It might teach you here, you need to control yourself for this entire week. We need to be in tune and we need to submit. The same way that we submit to God, submit to the market, submit to your system. Your system will take care of itself. Simply submit to what the market is giving you every single day. Submit to the lesson that the market's giving you every single day. If it's giving you discipline, take that lesson happily and say, I'm going to increase my discipline today because it's going to help me make more money in the future. We need to be on that same timeline as the market. Discipline today, analysis tomorrow, money tomorrow, right? Stuff like that. That's what we need to do. And if once we master this, be on the frequency of the market and saying, okay, discipline today, tomorrow, what do we want to do? Let's figure it out. Do we have a good setup? Okay, yeah. Take it. Okay, yeah, we made money. Great. Thank you, market. Thank you for the money. If you pass all these trials before, discipline, analysis, all of the complex things, the things that make you want to quit, maybe a loss today, a loss today, and then you finally take that good trade that is in line with your system perfectly, that is the market rewarding you after you've gone through all of its trials. Think like this. Be in tune to the frequency that the market wants to give you something and teach you something every single day. And I guarantee you, you will see a ton of results. Your psychology will be clear. When you get on the charts, you won't be wanting to trade. You'll be wanting to say, what is the lesson from today? Is it discipline? Is it patience? Or is it a money-making day? But understand that the market will not always give you opportunities to make money for your system. And the only way you can make money every single day is if you break your system every single day. That's it. So thank you so much, guys, for watching. I hope you guys learned something, and please apply some of this stuff to your trading, especially that the market is always trying to give you a lesson every single day. If you guys trade with market maker models, I'm going to be coming out with a super interesting market maker model video. I'm going to go over every single thing that I know about market maker models, making it super simple for dummies. I'm going to give you guys an entire trading plan on them. So thank you guys for watching. I hope you guys learned something. If you have any questions, drop them in the comments. Without further ado, I'm going to let you guys go. Have a good one, and I'll see y'all later. Peace out.